Why do most people stay broke even when they work hard, earn decent incomes, and try to save? The answer often isn't about money itself, it's about how they think about money. This is the psychology of scarcity, a mindset that traps millions of people in a cycle of financial survival, not growth. Let's be clear, scarcity isn't just about lacking money. It's a mental framework built on fear, short-term thinking, and the belief that there's never enough to go around. It's what makes people say things like "I'll start saving when I earn more," or "I can't afford to invest right now." But here's the truth. The scarcity mindset doesn't go away when you make more money, it just scales with your income. If you don't change how you think, more money simply means bigger fears, larger debts, and the same old habits at a higher level. Let's start with what scarcity really does to your decision-making. When you're operating in scarcity mode, your brain is in constant survival gear. It's focused on immediate needs: rent, bills, debt, and it's wired to protect, not to grow. This tunnel vision makes it almost impossible to plan long-term because every financial choice feels urgent. You stop asking, "What builds wealth?" and start asking, "What helps me survive this week?" That mental shift is subtle but destructive. Because the difference between the financially free and the financially trapped is this: the broke think in days and weeks. The wealthy think in years and decades. That's not intelligence, that's mindset. Now, let's talk about how scarcity reinforces itself. Imagine you get an extra $200 at the end of the month. A person with a scarcity mindset sees that as a reward, as something to spend because they deserve it. It feels like relief. But someone with a growth mindset sees it as capital, the tool that can be multiplied. This single difference defines wealth creation. When you're stuck in scarcity, your decisions are emotionally reactive. You buy to feel better, not to build better. You avoid risk because you fear loss more than you value opportunity. You work harder but never feel secure because you're always focused on what's missing instead of what's possible. That's why even people who earn six figures can stay broke. Their relationship with money is emotional, not strategic. Let's break this down into three major patterns that keep people in scarcity. Pattern 1: spending for relief, not for return. In scarcity mode, money equals comfort. You spend to escape stress: eating out, upgrading your phone, taking that weekend trip you earned. It's not that these things are bad, but when every financial decision is emotional, it drains your future potential. Financially free people don't view money as an escape, they view it as a lever. Every dollar either works for them or against them. Pattern 2: waiting for the perfect time. Scarcity thinkers always wait for the raise, for less debt, for more clarity. They believe wealth building starts later, but time is the most powerful multiplier of wealth, and waiting is the most expensive decision. The wealthy start early and small, using time as their greatest asset, because compounding doesn't require perfection, it requires participation. Pattern 3: defining success by lifestyle, not liquidity. Many people confuse the appearance of wealth with actual financial strength. The car, the clothes, the house, all signs of success. But most of the time, these are liabilities, not assets. True financial freedom isn't about looking rich, it's about being unbothered by money. It's about control, not display. Now let's flip the equation. How do you escape the scarcity mindset? It starts with awareness. You have to identify the invisible rules you've been following. Ask yourself, do I spend emotionally or strategically? Do I view saving as deprivation or empowerment? Do I make money decisions based on fear or opportunity? Once you recognize these thought patterns, you can start reprogramming them. Step 1: build a buffer. Scarcity thrives in chaos. When you're one emergency away from panic, every decision feels urgent. Start with an emergency fund, even if it's just a few $100s. The psychological relief of knowing you can handle surprises reduces fear-driven choices. Step 2: automate wealth building. Automation removes emotion. Set up automatic transfers to savings or investment accounts right after payday. When the system handles discipline, you stop negotiating with yourself. Step 3: Separate spending from emotion. Create a 24-hour rule before a non-essential purchase. This simple delay rewires impulse into intention. You'll be shocked how often wants fade when given time. Step 4. Redefine what wealth means to you. Scarcity makes you compare. Growth makes you measure. Instead of asking, "Do I have as much as others?" ask, "Am I better positioned than last month?" Wealth is personal progress, not social validation. Step 5. Start investing even small. One of the biggest lies of scarcity is "I don't have enough to invest." But every investor starts small. $10 a week in a low-cost index fund is better than nothing. The act of investing changes how you think. It shifts you from consumer to owner. This is where the mindset shift happens. You stop thinking like a spender and start thinking like a builder. And once your identity changes, your decisions follow. Now, let's address the emotional layer of fear. Scarcity is rooted in fear of loss, fear of failure, fear of not being enough. To escape it, you must replace fear with systems. Systems remove emotion from money. When you know exactly how your income is allocated, savings, investments, expenses, money stops feeling mysterious. You gain control, and control breeds confidence. The financially free don't feel less fear, they simply act despite it. They trust the process, not the feeling. Let's look at a real-world perspective. A scarcity thinker sees a market dip and panics. A growth thinker sees the same dip and buys the discount. Both experience emotion, but only one acts rationally because they understand that long-term, emotion and profit rarely coexist. This mindset shift is what separates consumers from investors. Consumers ask, "Can I afford this now?" Investors ask, "Will this create value later?" When you adopt that lens, every decision becomes strategic. Your income becomes seed capital, not spending fuel. So if you feel stuck working hard but never getting ahead, know this: you are not lazy or unlucky. You're conditioned. Society markets scarcity because it's profitable. Fear sells faster than freedom. Breaking free requires self-awareness and structure, and not motivation alone. Motivation fades, but systems stay. If you want to stop staying broke, start acting like someone who plans to build, not just survive. Because the real difference between broke and free isn't income, it's intention. The wealthy think in probabilities, systems, and delayed gratification. The broke think in reactions, emotions, and immediate needs. So take control. Automate your savings, start investing early, and redefine what enough means to you. You don't escape scarcity by earning more, you escape it by thinking differently about what you earn. And as always, this video is for educational purposes only. It is not financial advice, just practical insight to help you make smarter decisions with your money.